You know, in the world of investing, there's a simple rule, right? Good news means the stock goes up. Well, apparently, someone forgot to tell Revvity. They just dropped some fantastic numbers, and the stock got hammered. So today, we're going to dig into exactly why that happened.
And this is really the core question, isn't it? Revvity delivered what looks like a blowout quarter, and they even raised their guidance for the year ahead. And for all that, the stock gets punished for it. What on earth did Wall Street see that the rest of us might have missed in the headlines? All right, let's break this whole thing down.
Okay, first up, the earnings snapshot. And to really get why the market reacted so badly, you've got to appreciate just how good these numbers looked on the surface. We're talking about a clear, undeniable beat.
So, let's start with the bottom line. Adjusted earnings per share, or EPS, came in at $1.70. And trust me, that's a really solid number. As you're about to see, it was way ahead of what Wall Street was expecting.
And what about the top line? Revenue hit $772.1 million. Again, another beat over what the analysts were predicting, and it showed some pretty healthy growth compared to last year. I mean, so far so good, right? Everything looks great.
Okay, now this table really puts it all into perspective for you. That $1.70 EPS, that wasn't just squeaking by the estimate. That's a full 10% beat. And revenue? They cleared the bar by almost $11 million. Look, these are not rounding errors, folks. This is a significant outperformance across the board.
And this shows you how they did it, the engine behind that beat. You can see their business is pretty much split right down the middle, diagnostics on one side, life sciences on the other. But the real growth driver? Oh, it was clearly diagnostics. That segment posted a really strong 7% organic growth, while life sciences was basically flat. So that strength in diagnostics, that was a huge part of the good news.
All right, so guidance and the AI story. Revvity just had a fantastic quarter, no doubt about it. But here's the thing about the market. It's always looking forward. And this is where that simple, positive story starts to get, well, complicated. This is where it all begins to fall apart.
So listen to this. This is a direct quote from the CEO, Prahlad Singh, on the earnings call. I want you to pay attention to the language here. He says things like encouraging signs, but then he immediately follows it up with, we also want to remain cognizant. See what he's doing? He's tapping the brakes. And that last part, assuming recent end market trends continue, that's code. That is the language of caution, of prudence, not the sound of someone who's super optimistic about the future. And boom. This right here, this gets to the absolute heart of the matter. This is what was making the market so nervous. Look at the left, that amazing 7% growth they just posted. Now look at the right. Their forecast for the entire next year is just 2 to 3%. I mean, you can see why investors are scratching their heads, right? They're asking the big question, why the huge, sudden drop-off? So how does management respond to this anxiety? Well, they try to change the subject, basically. We're calling it the innovation offset. They're trying to get everyone to focus on their long-term AI story. They're talking up the launch of this new AI platform, a big collaboration with a giant like Eli Lilly. And they're pointing to their Signals software, which, to be fair, is growing like a weed at 40%. The message is pretty clear. Hey, Wall Street, don't worry about the cautious guide for next year. Look over here at this shiny, massive AI engine we're building for the long run. So let's move on to the market's verdict. You've got this wild mix, right? A stellar Q4 beat, a super cautious guide for the next year, and this really compelling, but far off AI story. How in the world did investors process all of these conflicting signals? Well, let's find out. The way the stock moved tells you everything you need to know. It was fascinating. At first, in pre-market trading, the stock actually popped. It was up about 2.5%. You know, the algorithms, the early traders, they saw that headline beat and they loved it. But then people had time to actually read the report, to listen to the call, to digest that guidance, and the mood flipped. I mean, it completely reversed. By the close of trading, the stock was down over 5.5%, just a total brutal reversal. So why the drop? It really boils down to this. The market cared more about future risk than past success. That 2 to 3% growth guide, that was seen as a huge red flag. The margin guidance suggested that costs were going to be an ongoing problem. And then you had analysts getting really nervous about broader economic uncertainty, especially with what's happening in China. Suddenly, that great Q4 performance felt like it was already in the rearview mirror. Okay, the next call, our take. So, that brings us to right now. The stock has been knocked down and you've got this clear battle between a cautious present and a potentially amazing AI-powered future. So what happens next? All right, let's put on our analyst hats and give you our take. First things first, our rating is market perform. Now, what does that mean?
It just means we expect the stock to perform pretty much in line with the rest of its sector. Look, it's not a sell call by any means, but that really cautious guidance is perfectly balancing out the exciting long-term AI story. So for right now, we see the stock as being stuck in neutral.
And here's our thesis broken down step by step. Number 1, our prediction. We fully expect them to meet that low 2 to 3% growth guide in the next quarter. They set a low bar, and they'll probably clear it. Number 2, the price action. Because of that, the stock is likely going to stay stuck in a range, just trading sideways until something new comes along. And that brings us to number 3, the key catalysts. What should you be watching for? A guidance raise later in the year, or, and this is the big one, real tangible revenue from that new Signals AI platform.
So, what's the bottom line here? It's pretty simple, actually. Revvity is officially in prove-it mode. The market has heard the cautious guidance, it's priced that in, and now it's waiting. It's waiting for that exciting AI story to stop being just a story and start turning into actual numbers on the income statement. The entire investment case right now hinges on that. The waiting game is on.
And just a quick reminder for everyone watching, this is not financial advice.